Happy Friday afternoon, everybody. Welcome to another MSP Cyber Roundtable. We're super excited to have Carlson and Nick from Cork here for wow, it's the first time I've ever seen it flipped like that. That's pretty fancy. The first time, excuse me. We're going to be talking about cyber insurance, blind spots, covering the gaps. We're going to go into depth on warranties. So that's going to be a lot of fun. Before we jumped in here, I was hearing some pretty cool insider information on how you can customize your lightsaber. So I would love if Nick could just go into detail there.
Oh boy. So
Wait.
Carlson goes to Disneyland a lot. I go to Disney World a lot in Florida. And at Galaxy's Edge, you could build your own custom lightsaber. And the color of the lightsaber is based on the kyber crystal that goes inside it. And all that kyber crystal is an RFID, which tells the lightsaber to, hey, be this color, be that color. And those kyber crystals are like 50, 60 bucks at Disney World. So if you want a red one, that's 50 bucks. If you want a green lightsaber, it's another 50 bucks. Meanwhile, the tube is all the same. So thinking creatively, all you have to do is go onto Amazon for about 25 bucks and get an RFID reader writer, take out your kyber crystal, punch in the RFID code that you need it to be, and now you have a blue lightsaber, a red lightsaber. All about, saving money any way you can.
There you go, man. And that's important because you're getting married and building a house.
Mm-hmm.
Those are two really
Absolutely.
exciting.
No, got married on Friday. It's there.
Oh,
it's there.
There you go. Congratulations. That was quick. How was it? Matt, get me up. Put this man up here. Get me off the front screen.
Nope, it was great. Yeah, she's amazing. Loving my life. Happy to have her. And it was a fantastic wedding. And then 48 hours after my wedding, I was on a flight to Las Vegas for the Kasei Connect conference. That's where I was all this past week. Got to engage with a bunch of MSPs there. And now I'm back at home, business as usual.
Okay, the only question I have for you, though, Nick, did you give her a black cyber crystal? As the real one, not a hack one?
No, not yet. She actually bought me the lightsaber experience as a thank you the same week that I proposed to her. Because I proposed to her at Disney property as well.
You got her a rock and she got you a rock.
Yeah, kyber crystal rock. Yes, only the rock I got her was much more expensive.
What were you saying, Matt? You started to talk there, and then
it's just she really knows you, Nick. Apparently.
Yes, she certainly does. Yes.
That's awesome, man. That's awesome.
That's wild.
Well, you're building a house. Remind me where you live.
Connecticut, home of awesome pizza.
Yeah, yes. That's right. I remember that. And tell me the house concept. What's your favorite room going to be, and what's the house going to be like?
So my favorite room is going to be my future office. I'm going to have like these nice light up bookshelves, and that's where all my figurines are going to be. I got all the Infinity Stones from Avengers, so that's where the Tesseract is going to be, and the gauntlets are going to be. So if I start doing another episode about 6 months from now, you might see those in the background.
Ooh.
Awesome, man. That's awesome. Cool. Well, we're excited to have you. Let's hear a little bit from Carlson. I'm going to ask you some questions if you don't mind. I would love if you could talk a little bit about your background and how you got to where you are now. And
so, absolutely. Now, to start, I want to remind Nick one thing, right? That hack on Cyber Crystal will never work when you have a kid that is yours. Go, daddy, I gotta have that green cyber crystal. Try to tell them, like, don't worry, son, let me go get you the red one and make it green light.
Coming out.
Welcome to the Disney experience, my friend.
That's a good point, man. That's a really good point.
So wait, I'll tell you a little bit. My background's quite interesting, very similar to Nick. Prior to this was in the MSP space with Datto. But prior to all of that, though, I got a pretty wild career. I think some of you who have known me, might have met me, I pretty much worked through every single industry you have to think of. The one thing that's linear against is really getting a new industry, taking a look at and ask a question, why the heck would you do things that way? People question, well, we've been doing this for this many years. Then I go and disrupt it and try something new, right? As early as when I was in the early days of enterprise software business, we took the product running from a on-prem server to cloud running. We write an application to run on Netscape. I know Netscape, you might be like, some of you might go, what the heck is that? It's called Browser Day. Early days, we ran
I
an
don't think the
application.
cloud's that old, Carlson. I don't. They didn't call it the cloud back then.
Yeah, they didn't call it cloud. What do we call it? The high performance computing center, right? At the end, it's just cloud. It doesn't sit up 30,000 foot. Then I got in the gaming industry, spent good 10 years at working with company on games like Call of Duty, World of Warcraft. Spent a lot of time building tools that let people play online, let people play multiplayer. In fact, one of my cool project that I built ended up to become what people know as BattleNet for those gamers out there. Got in the gaming space, toy space after that, and toys said, hey, how do we make toys come to life? So did a lot of fun stuff at Mattel when I was there. Did things including reimagining the Viewmaster, did a deal with Google, did Viewmaster reboot, where you can put your phone in there, do AR, VR, different way of looking at it. Then I got in a restaurant business, got it right in the time of the pandemic. So
wait a second, say that again.
Restaurant business.
The restaurant business.
I know.
Have you and I talked about restaurants yet?
No, I have not. But
did you know I like to talk about a restaurant from time to time?
Yeah, which restaurant you want to talk about? I can talk anyone.
I owned a few Domino's for a little bit.
What? Yeah. Domino's is one of the players that they know how to use technology well. I mean, I was working.
They call themselves a tech company instead of a pizza company, which
tech company that
as a young Dominoid I thought was silly, but now as I know more about tech,
no. You're a franchisee, so I was on the corporate evil side. I'm the franchisor.
I started there.
Yeah, so I was I was working for a company that owns 18 different brands like Smashburger, Coffee Bean, and TV. Okay. So I was doing all.
Yeah, you were really with the Sith.
Yeah, I'm with the Sith for sure on that one. But what's interesting, that's really where I first came into touch with MSP ecosystem. We were actually using MSP as our regional. We had 35 country of operation, 6,500 restaurants. You can't hire enough IT people. So what we do, we hire local MSP wearing our T-shirt to go and service our franchisee, like yourself, who became a franchisee. That's kind of how we've done it. And from that point on, got into data, got into to help the company look at what the next generation product looked like. And after that, we started Cork with, my, favorite. I would say that Seth or the light side. We'll pick a good side for, for Nick where he lives. But the reality is this is kind of how we ended up here. So looking at how can we disrupt and change and ask the question, why wouldn't you do that in the cyber insurance space? That's how Cork started.
I love it. Tell me what's been your favorite. You've done a lot of different things. What's been and a lot of unique things in the journey so far, other than Cork, which I'm sure is your favorite currently.
Well, it has to be.
It has to be.
It's my baby,
right? What's been the highlight?
I think the highlight is, for those of you, I know I'm geeking out. For those who are gamers, I loved it in the gaming industry. I will tell you that if I ever have the energy of a 20 years old, I will go back to the industry. Now, I'll say this to warn everybody who say, oh, it'd be fun to work in the industry. Yes, but be ready to work 14, 16-hour days, 7 days a week. It is a grinding machine. You got to love what you're doing to get in there. But I think that I learned the most in that industry. You learn to work against deadline, right? I remember in the days when people still buy discs for video game, when we had to launch Call of Duty on time to ship it, you got to ship it what they call gold disc. You send a manufacturer and you print a bunch of these discs and put it in the box, and you go buy GameStop.
I started buying DVDs again.
Oh yeah, DVDs.
I started buying DVDs again because you watch the movie on Amazon and you're like, well, wait a second, I want to watch that, or show it to somebody, and then all of a sudden you buy the damn thing again, X, Y, and Z. So I legitimately have started buying my favorite movies.
Okay, but do you have a player for it though? I think I might have.
Man, PlayStation. I got the PlayStation.
Okay, let's go. Let's go do it.
There you go.
Yeah. It's a different world now, isn't it? It used to be you could be a little studio, right? And you make your game, you go in a hole, you make your game. It's great. You go shop for a distributor, you get it out there, they do the marketing thing. That's not the way it works anymore, right?
No.
Now we've got these huge production houses, and they call them studios, but they're basically just like
full stack
sub units of the engineering team, not even a whole engineering team, right? So it's a different world.
It's very different, right? Because guys like Epic is a good example, right? They were the one who broke off from the standard world of, I got to make the game, let me give it to the publisher like Activision, who I work for. We'll put all the marketing around it, put the fun stuff around it, put in a disc, put in a box. Because you can go direct to consumer, guys like Epic have their own little branch that they just go direct to consumer. no reason to go through a publisher. It is a really different world. But I would say that's the funnest part. The fun project I worked on a little bit was, we built the foundation for what known BattleNet. Those who play World of Warcraft, who play StarCraft, is an engine that does single sign-on, keep all your scores. When it's down, we get yelled at. People want to come and kill us. That was.
I played Hearthstone for a long time.
Oh man!
Right when it came out, man, I was on that BattleNet.
Yeah, I know that BattleNet had a lot of late night that I slept in the studio, but it's part of the grind and the learn. And someone asked me the other day, "Would you ever go back?" I would love to, but I don't have the energy. I'm old. I'm not 20 years old where I live on Red Bull, right? I can sleep on the floor. No, I like a bed now. I like a mattress I can sleep on. I got a little bit, I upgraded.
My mattress. Mattress.
I go like this, so.
Okay. You're better than me, man. I need the soft stuff.
I gotta say, Zach, I don't really want to go into the next segment, but
well, let me ask him two more questions. Two more quick questions. One, what's your favorite food?
My favorite food, or like the favorite food I had in the last 24 hours? There's a big
No. Food, period. Just like
simple. Dessert. Dessert is a whole category for me. Like these guys, like Nick will know every time we go to meal, right? He'll be like, "Oh, we're full." I'm like, "I gotta say dessert menu. That's a separate meal. I have a separate stomach for dessert, so that's a really important thing in my equation."
Like that tableside ice cream we had last month.
Oh man, that was amazing, right? That tableside ice cream. It was like, what an experience.
Yeah.
What is tableside ice cream?
All right, so think of like tableside guac, but like ice cream. Like they brought the milk, the cream, they brought that like nitrogen or something, and it like froze right by your side. And
Oh, I've never heard of that before.
That's cool. That's cool. That's a date idea. Thanks.
Now wait. So I've seen ice cream machines for the house, and they're like you have to plug them into the wall. So like
do this and
it was
It's
a battery
powered.
powered. Yeah,
No, it's the nitrogen.
Liquid nitrogen just freeze it right away. And
They just have metal tools, probably. Yeah. Well,
right.
Carlson, tell everybody where you're located, and then I will stop the interview portion. And
Yeah,
we'll
it's a
dive into the lecture.
sunny Irvine, California, where we pay heavy tax for the sunny weather that we get continuously. But it's also something that I taunt all my East Coast, colleague like Nick. It's like, oh wait, oh my God, it's 70 today. I better break out my.
So they're taking those tax dollars and they're giving you guys more sunshine with it.
Yeah, pretty much. But
That's
I think
crazy.
it failed this year because we have more rain than we ever had. We don't know what to do with them. We got inches of rain.
Who screwed that up?
I don't know, man. I think our governor somehow, did that, break it with the weather god somehow.
We better go to the next section because we just started talking about politics and I could get really lost.
All right. Here we go.
Oh, now I'm over there.
Today we're going to talk about the POPIA framework from South Africa. I've heard it both ways. So a couple of years back, the powers that be down in South Africa decided to follow in the footsteps of Europe and implement a data privacy law. I decided to highlight this today because, first of all, it was fresh and new a couple of years ago, but now we've actually seen a little bit of impact on industry. And it's really interesting to see this market really go from no cybersecurity appetite to every small business owner knows they need to be doing something, right? And I get to watch that evolution over a couple of years. Super interesting to be able to interact with the market as that's happening. And this is happening all over the world right now, right? In South Africa, just like GDPR, it's focused on, are you managing your cybersecurity risk? Are you managing your cybersecurity program? Do you have an effort at compliance? Like, are you making sure that you're doing all of the things, right? And then, of course, is anyone looking over the shoulders and actually checking to see that there's evidence, there's proof that the cybersecurity is actually working, right? So those are all components of the law, and just like other similar laws, they don't go into great technical detail, but they talk about things like the executive mandate. They talk about how you need to really communicate the needs out to everyone in the organization. define roles. You need to put governance in place for cybersecurity. You need to monitor all your systems and cybersecurity tooling, and you need to make changes. So I think from the perspective of effort at investigating improvements, effort at making changes, at connecting with stakeholders around cybersecurity, I actually think this law actually touches some better points than we see in laws like GDPR. I don't have a lot more to share here. We don't need to go any deeper on this. I'm curious though. I mean, you guys work in a lot of spaces. Have you been seeing an increasing impact of these privacy laws in your spaces? Have you run into POPIA or POPI before?
Carlson, I'll let you take that. I know that some MSPs, when we talk about them, they're very concerned about the access that Cork has to their data when we're seeing it. You want to chat a little bit about how our API work? That way we could still give MSPs and their clients a warranty, but not see the keys to the kingdom.
Yeah, I think I can probably speak a little bit about a lot of privacy laws. Oddly enough, during my days in the toy industry, we deal with a lot of data privacy related to kids' data, having parents' authorization. Then in the restaurant day, just like where Zach's been, right, operating a restaurant, you carry a lot of PCI data, including credit cards, PII information for a loyalty program. One thing that was really interesting.
I was fortunate to not have to as a franchisee.
Oh, that's right. Your Seth Lord, the corporate franchise always had to deal with them.
Yeah.
Okay. So lucky for you, I was that person who had to deal on it when I was in restaurant space. One thing is interesting. What you see is, I think globally speaking, U.S. actually has the least amount of restriction, right? Europe, internationally, GDPR is extremely strict working in that environment. So for us, when I walk into what we do at Cork, we know the first question get asked: are you carrying these data? Are you following all the regulation in different market? Well, blessing for us right now at this current moment with North America operation only. So really the piece that we look at primarily is PII data, any PCI related data that can create issue for the end small medium business client. So fundamentally, we don't collect any of those data. We do a really simple, lowest privilege read-only access to the security environment for a very good reason, because we don't need those data to look at, or does your user have MFA on? Have they have the good security patch up? They have a good security hygiene. So that's kind of the nice part about it. But I would imagine as we expand our business to the European market, it's going to be, it's going to add a lot more server, a lot of process behind it. Having that in my prior life is nothing new, but it does keep me up because these law does change market by market.
Well, we have 50 different states here in the U.S. and they've all taken different approaches towards privacy laws. We've got privacy laws in almost all those states, and they're all different. And in some cases, they actually conflict.
Yep.
I don't usually argue for federal intervention, but it's sort of a mess.
Well, welcome to my state, right? California. We have one of the strictest policy, right? Somebody can go on your website and say, I want all my data to be erased. You have to do it within, I think, 72 hours. That might have changed. You got to erase all history of that individual's data in your system. I mean, that is, talk about extra workload that you don't need on a normal day of work.
How do you go about solving for that? It seems like you may not be able to tell me, and if you're not, that's totally okay. But it seems to me like the right solution would be to give the owner of the data, which is technically the person the data is about, in my personal opinion, the ability to press their delete button themselves on their own data and not leave it up to you for 72 hours, but rather give them the autonomy to just hit the damn button.
Yeah, I think it's easier to say than done, right? As you probably know from a technologist perspective. We all grew up by adding legacy stack, and by the time that you might have a front door of, here's a simple way of a single sign-on, right? I always use that story, right? But behind the scenes, a spaghetti factory that does, when you do this, it triggered the script, it move it off here, move it off here. So I think that's kind of
we had the spaghetti factory growing up when I was in St. Louis, man, and we loved the spaghetti factory.
Ooh, those are best. They still have some sitting around California.
Oh, okay.
But I would say
the taxes are going towards.
to Matt's point, though, I think it does need federal intervention. I do think there's something that the Europe. I know that gives you a look.
We
I
It's
think
okay.
there's some kind of standard you start off with. It can be each state have their own way where they're competing each other. But again, right now, the good part is for what we do today is less an issue. I can't imagine I was doing the restaurant space as a
well,
franchise
this
more
is.
having to manage that. Ooh.
I mean, you guys live in California.
Yeah.
You probably realize the place that California sort of sits in the legal framework in the U.S., which is California gets to make the privacy law, and then everyone else has to comply because there's such a big market, right? So that progressive market like pushes the legislation forward. Not necessarily enforceable in other states, but like, are you really going to cook up a different solution for 50 different states is really a good question. But the enforcement authority, I don't know. I haven't seen California out there enforcing on COPA yet, so I don't know. We'll see. We'll see what happens if there's any big cases that show
You
that
have
they
to
have
bring
the.
Copa back. That was my old days when I was at Mattel in the toy business. All the
Yeah.
digital with Copa. Every time, like, oh, Copa compliance. That was like, that's what kept me up back
That's
then.
the first time I've heard that one.
So we're talking today about cyber insurance, but specifically like those spaces between the cyber insurance, right? Yep. So before we talk about the spaces, I guess we should talk about like what is cyber insurance usually look like for a person who goes out and buys cyber insurance to protect themselves? Like it has some protection, right? And where is it good at protecting and where is it not good at protecting?
I'll let Nick kick it off, and then I'll fill in the gap. He's been pretty good with that.
Yeah, absolutely.
Yeah,
So
cyber, just the kings of the gaps, man.
Yeah, exactly. So
the gap filler.
Cyber insurance is super important to all small businesses, and all small businesses should have cyber insurance. You can get coverage upon millions of dollars that really will give you financial assistance if there's a major outage, major ransomware attack, etc. Doesn't matter if you're a small business or even a large business. It's not a matter of if you have an attack, but when it's going to happen. I just came back from Las Vegas, and I was at the MGM Grand Casino, and I had a fantastic time. But MGM was also in the news last year, right? They had an identity breach, which caused millions of dollars worth of downtime. So it doesn't matter if you're big or small, you do have the ability to get hit. So cyber insurance is super important for getting you back on your feet for sure. But there are also some limitations of cyber insurance. Typically, when we come across cyber insurance, if a small business is fortunate enough to qualify for cyber insurance, just because you qualify for cyber insurance doesn't necessarily mean that you're guaranteed to get a claim payout. We're seeing claims getting denied roughly about a third of the time. And even if you were lucky enough to get paid out by your claim, it's not real access to funds right now. You're waiting a couple weeks. Yeah, Zach.
I just want to interrupt, and I want to throw a dart at one of those words because so far I'm like completely on the same page. I think lucky's the wrong word. I think that I work with a lot of service providers that go out of their way to be very thoughtful about the language of compliance and about their specific clients that have things that they have to be very thoughtful of from a regulatory perspective. And it isn't a luck thing that causes people to adhere to what the expectations are of the insurers and of the SLAs and of the regulations. It's somebody going well out of their way to be thoughtful. And it's tough to do that because it requires a ton of education. It requires understanding of the client. Mm-hmm. It requires understanding of the cyber insurer's needs, desires, and legalese. And that's like the reason you say luck. And I want to draw the full point is because it freaking feels like luck when you have to corral all those cats, and then deal with an incident at a high level. So I don't think it's luck, but I get why you used the word.
Yeah, let me rephrase it as fortunate enough to have an MSP that implemented the proper cybersecurity procedures instead of luck.
Thanks. I didn't mean to derail you. Keep rolling.
Yeah. No worries. And with that in mind, that's really where warranty comes into play because it's really designed.
Wait. So slow down there a little bit. Okay, sure. We got some time here. Can we talk about this situation where before we talk about like the thing that maybe we can solve from this problem, what are these situations? What do they actually look like, and what do they feel like to the small business, medium enterprise when they put that claim in and it doesn't turn out the way they expect, right?
Yeah,
So we're talking about claim denials. We're talking about it was an approved claim, but it didn't cover what they thought it covered. Like
Let's
what?
start with claim denials. That's great.
Yeah.
What are some circumstances, guys, that you've seen people run into claim denials that they didn't expect?
yeah.
I'll start with,
That's a great point, Matt.
Yeah, and I'll share a quick screen here. I mean, this is straight off from the internet. It was Travelers Insurance, right? They denied a claim because of MFA misuse. You know, that's just one example where, yeah, they had MFA turned on, but it wasn't turned on for the on-prem physical servers. As a result, the insurance broker is trying to get out of paying out this claim, and they did. This article is a little bit older, but they ultimately did. They did not pay out the claim here.
So this
let,
is
let me add to this. This is an interesting
yeah.
point. When you fill out that survey form, I'm going to go take it one click back on this one's interesting. We all know the cyberspace is digital, right? And it changes every single second, right? The environment probably changes every fraction of a second with all the AI thing that we are doing, the bad actor is doing. Okay. The underwriting is this long questionnaire form that you filled out. Now, though it's digital in a PDF form, it's static. It's that one moment saying, do you have MFA turned on? It's 0 or 100 being checkbox. But the reality lives like this. You're looking at environment, even with 2 users. Each user will probably have, I don't know, let's just call it a dozen application, and on average, 3 devices. So when you check that box, are you saying both user, all 3 devices, all 12 applications that you use, all have MFA on? I'm going to bet that the answer is no. But the representation that by checking that box is, yes, MFA is being used. So I think that's really where the lineage, what I would call using an analog methodology to represent the risk of a digital environment.
So you're talking about a situation where during the application process, people, they want to say yes to the answers because
Yep.
they want to look good for the insurer. They want to get insurance, right?
Yep.
And they say yes, 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 yes. Now, I've been teaching people for many years.
No.
You should qualify your answers so that they can be interpreted as yes if the underwriter really wants to sell you a policy, but that you've clearly identified exactly what's realistic so that you have that out if something like that happens. But in it, and the applications say this. They like give you that tiny little box, but then they say, feel free to add paper on the back, and that's what people should probably be doing. But people don't always do that. It's most common to just check.
Many people don't know to do it.
Yeah.
Many people don't know to do that. You're right. It's missed in not everyone gets coaching on how to fill out these apps, right?
Yeah.
But in any case, you fill them out. The answer is really like no one's 100%.
No.
And most people aren't usually 0 either. It's usually someplace in the middle.
Yeah.
And for our platform, we do like none, some, most, all.
Almost.
And you're forced to choose where you are on the spectrum with the understanding that you're not always on the end, right?
But see, though, that's still a subjective view, not a quantified. It's qualitative versus quantitative.
Right.
I think it's most because I'm awesome, or maybe it's not as much because I have low confidence in life, right? But that's the
right. Well, but that's the reality. The world's gray, right? So.
Well, and I think it's from my perspective. This is an issue from the insurance carrier perspective because they're asking a question. I mean, everybody on this call, we have different ideas of how to solve it. And I think that there's validity in both of them. But the reality is it's a problem spawned by a faulty question, which if it's a yes or no, and we're both agreeing, well, it could be 2%, it could be 98%, it could be confidence, it could be overconfidence, it could be, any of the things. And the reality is in the course of life, it's going to be some combination of all of the things when there are errors. It's really that the question being asked binary is wrong. Which, I mean, I think lends to Matt's point about how you present your information.
There's that problem, the misalignment in the questions, right? But then there's Carlson, pointed out the second thing, which is, well, the answer was yes when you filled out the thing, and that was 7 months ago. And meanwhile, things change, and you either made an error, like you just accidentally changed something, or accidentally didn't do something, or like just things changed. You used to do this thing, now you do that thing because people switch MSPs, they switch whatever, like they get a new employees, like things change, right? And so
Well, and it's
that's
tough to get
reality
people to do all of the things. You
all the
can
time.
say
Yeah.
as a company, well, the expectation is to do MFA and we follow up in this way. But the reality is I've had, teams of many hundred people, and my expectation is that you wear a hat. And I can guarantee you not all those lovely folks wear a hat every day.
And
And it's the same thing.
there's another thing that Carlson didn't point out. A little insider baseball. I'm not an insurance. We don't sell insurance here, so I'm okay telling people this. But insurance companies actually, like, their decision making is not as smart as you might think. Um, they have some basic criteria, and then they give you the app, and they're not even reading all the questions. They're looking at for a few of them, and then the rest of them are just things you've documented on paper that can then become evidence used against you later, and you didn't even need it to get the policy. And so you've disclosed things that had no impact on the underwriting, and then during a claim actual investigation where people are actually thinking hard, which is during investigation, right? They look at this and they're like, oh, you wrote this thing down, and we might have relied on that when we gave you the policy, therefore, invalid. And so those are denials. And so, like, in those cases, like, you just make it $0, right, from the insurer.
Yep. And it's something we're seeing time and time again. Actually, I think I have a slide on that. So yeah, there was actually based on the 2023's cyber insurance report by a third-party company called Delinea. They had
That's
some
not this
pretty.
one?
Yeah, no, that was it.
Okay.
They had some pretty startling analysis there. Of all their respondents, at least had one exclusion in their policy that would void coverage. And in small businesses in particular, we're seeing that 28% of them were denied coverage in the first place. And of those that did have coverage for cyber insurance, 40% of them had their claims denied due to lack of security protocols during the investigation. So it's just absolute crazy numbers here.
Wait, what percentage is that? I'm sorry. This document's got so many wonderful points that I'm lost. What percent of people, because of failure during the investigation?
Yeah, so 28% of small businesses are denied coverage. So it doesn't even, like, the insurance company won't even take their money. 28% your coverage is denied.
Sure.
And 28% can't even buy the insurance, I should say. And then those that do buy insurance, small business in particular, based on the data of the report, 40% of them had their claims denied due to lack of security protocols. And I think that ties a lot into what we went over earlier regarding the lack of visibility. Yeah, you might be saying yes on that checkbox today. You might be saying MFA is turned on, but in reality, before you get that check from the insurance provider, they're performing a deep analysis. And that's when, unfortunately, claims get denied. Yeah, you said MFA was turned on 7 months ago, but it's not over here.
I've got a question, and I think I want to direct it at Matt. I'm not sure that I want to direct it at Matt, but everybody can answer, but I think I want to gut it right at Matt. And the question is this: is it not the insurer's freaking responsibility when they're investing in risk to ensure that the risk they've invested in is appropriate? Well, if I'm paying tens to hundreds to, in some instances, probably not in the S&B, but millions of dollars into cyber insurance, how could it possibly be 40% of the claims?
I feel bad because I don't want to pick on insurers. They have a tough business in trying to balance an actuarial.
We're not picking on any specific insurer. It's a problem.
Right. And some of them do a much better job than others on this type of thing, right? Yeah. It's specifically in cyber, but they have a problem, which is they have to take all the cyber risk. Somehow they have to assetize that. They have to figure out the cost of that risk, put it as a liability on the books against the premiums. They package it up, and they have this asset, which is the package of reinsured risk. And it's like this crazy exercise, and basically it's so impossible to do that they basically fake it, and sometimes they get it right, and sometimes they get it wrong. And the way they make money is, a lot of this is, how do they deal with the claims? How do they deal with the investigation? How do they manage incidents and losses? How do they deal with price elasticity in the market versus, what does it cost to underwrite? Like, that's where they're making money. And one of those things is, they may deny a claim, and they may think, well, there's a 60% chance if we deny claim, that's the end of it. We don't have to pay out. Now, there may be a 40% chance that if you raised your hand and went to arbitration, you'd win, right? But if they think that like overall across their package of list, a certain number of denials are going to result in them not paying out overall, they're just going to choose the option that costs them the least. They're going to factor in the legal fees and the arbitration fees and all that, right?
Well, that just makes me sick, because if there are business owners and MSPs that think, really to maybe no fault of their own in some circumstances, and I guess I'm open to being challenged on that, and I guess an insurer would, by no fault of their own, or and almost half, which is crazy.
Yeah.
It would be like if at my Domino's, almost half the people that ordered a pizza didn't get a pizza. How long? That's crazy.
So
let me ask an interesting point, right? Like what Matt kind of point out is what the money they put aside, right, is what they call loss reserved, right? For every dollar they collect, right, the industry average right now, the loss ratio is 60 is continue rising, 65%, meaning that every $100 you collect, $60 to $65 they have to put in a piggy bank, okay? And they can't touch it. It's not operating, it's dollar they collected from you. Through that process. Now, after a year, if you have no claim during that year process, then that 65 becomes unlocked. It goes back into working capital. The reality comes down to a couple of things. I think standing on the part of the insurance space in general is that one is we already hit the topic. The correlation to the actual risk is murky at best, right? A form, static, checkbox, dynamic environment. I keep going back. Analog methodology to underwrite a digital environment. That's number one. Second, the underwriting, I think, Matt, you kind of mentioned it a little bit. The algorithm of those are typically coming from more traditional asset they protect. Home insurance, fire insurance, like my home insurance, right? I live by a hill, by a valley, got a lot of dry bushes. Guess what? I'm a higher risk house than the one that, a mile down the street away from the mountain. Well, the mountain ain't moving, my house ain't moving. So the risk itself is constant. It doesn't change from that perspective.
Sure.
Cyber risk, guess what? It is changing like every single day. But if you take that underwriting methodology in place, all of a sudden you're going to find yourself going, guess what? The underwriting is not working. They end up losing the more claims because you might appear to be a safe environment that you're so far away from the mountain, but because of poor security hygiene, you're getting break left and right. So now the loss ratio keeps going up. It goes to 60, 50%, 60%, 65%. It's just a matter of the correlation of the underwriting is not tied into the.
So the deck's stacked against you as an applicant. And there are things you can do to make it better. So you can be brutally honest during the application process and tell people all your flaws.
Yep.
But still look good, and that will help you.
Dating.
Yeah.
But it doesn't get you all the way there, right? Because you actually, if your security fails in the future, have no idea how it's going to fail. But that can help you.
Yeah.
This is like the denied claim problem. We talked about that. We dug pretty deep there. I'm also interested in we're talking about the claim amount that we get back is not what we thought it was. And I don't know, are we ready to tackle that one or?
Yeah.
So I'm actually way less knowledgeable here because I know that there's a lot of different type of subcovers, right?
Yeah.
And it's the cracks between those or the fact that some of these sublimits are maybe like you get a $5 million policy and then you have this $250,000 sublimit, right? That really gets people into trouble. So
It's
Can you
this.
talk about that a little?
Yeah, I mean, how many of you actually have read through a insurance policy, like cyber insurance policy?
I've tried to read lots of them. I've
Okay, now,
tried to read lots of them.
let's take this. Take that 200 times. That's how much I have read and my team have gone through. Dude, it's like 200 different book of a different way of looking at it. Now, one commonality that we found is this. Okay. And I'll take the most recent example. We have reviewed a policy for a MSP end client. It was a $5 million policy. The end client says, I don't need anything. Life is good. 5 million is going to cover me for any incident. Signed, done. Oh, hang on. Page number 345. I think it was like 34 of 86 pages. In there, it talks about sublimit. What sublimit is, meaning that what that is during a time of incident, based on the type of incident or attack, this is what we will cover up to, as long as you still have a total coverage of 5 million. So for example, in this policy, we end up finding that for this small medium business, though they have a $5 million total annual coverage, on a per incident basis for ransom attack, listen to this, are you sitting down?
No.
The sub limit is $100,000 max for ransom attack, which is one of the 60 highest type of attack against a small medium business. And on top of that, there's a $75,000 what they call retention, which in layman's term, deductible. Wait, hang on. So I just got a ransom attack, and it cost me $100,000 for this. Yeah, it cost me 200. Let's say call 200,000. The sub limit will cap it at 100,000, and you still have to pay a deductible of 75,000. So the out of pocket, essentially, the insurance will pay you $25,000 out of your $5 million policy. That sounds great. This is where some of the underlying reading between the lines is important. You have to we always advise the MSP to help the client to look at what is the most important. Don't look at the overall cost, right? The overall coverage, because that's the, what do you call it? Is the iceberg, the tip of the iceberg, right? What you need to look down to is what is the sub limit coverage for ransomware? Do they cover fund transfer? Fund transfer is one of the things most policies don't cover unless you pay some additional limit.
Well, I think a lot of people think their bank's going to take care of them, right?
They can within 24 hours. If you catch them within 24 hours before the transfer occur, after 24 hours,
usually, and not even always.
Nope,
I don't even know if usually is the right label. Oftentimes they
do their best within 24 hours. If they can't get it, they can't get it. So that's kind of the piece I we always advise for. Don't look at the tip of the iceberg. Look at the one that matters: ransom attack, fund transfer. Right. Those are the
things that are happening.
That matter to PEC to end small medium business. That can take them out of business.
Or for some businesses, downtime, right? Like
business interruption loss, right? They call them.
Well, if you have $5 million coverage and the thing that's most likely to happen is no coverage at all, it's like if you got fire insurance in California and they were like, or you got insurance on your home, and it included a little bit of fire, a little bit of rock slide, a little bit of
So that's the sublimits.
Let me make my
sorry.
point. Do you want to just go ahead? Go ahead. Here, my points. Go ahead. You've got it. Go ahead, Matt. You don't want to hear my point. That's fine.
That's the sublimits, but it's not just the sublimits that are a problem. I've seen like people do crazy things in definitions in those policies, right? I once read that computer system was defined as like just the hardware, not the things in the hardware. It didn't include SaaS. It didn't include anything out of the cloud. So I mean, there's a lot of opportunities there, right, for not getting what you expect.
And it's not I would say the industry is starting to catch a wind, right? They need to start learning how to do this, right? How to do it right. I mean, they got players out in the market that are, doing this with technology, but fundamentally, you got to believe, right? Ultimately, the entire industry is built up on the algorithm that's been training the machine, right, to run analog methodology to underwrite a digital environment. I always go back to that. That's really where the gap in between. Read the policy. I keep telling people, they go, well, there's 85 pages. I go, well, then at the end of the day, if you got a $5 million policy for annual premium of $6,000, chances are the sub limit very limited. I've seen $5 million policy that costs 5 times as much. But man, that sub limit is, is $1 million. All of a sudden it becomes a viable option. You pay for what you get.
Yep.
So it's important to get this insurance, clearly, but it's like a fishing net that lots of stuff fits through, right? And of course, it's important to build security into your systems, right? But you guys operate in another space, so what is it like to have a warranty? Like, what does that feel like? Is that like before the claim, after the claim? Is it like instead of a claim?
I could touch that on that real
Nick's
quick.
like,
Yeah. Put me in, coach. And I think I have a quick slide here as well. So when I think of a warranty and a cyber warranty, I like to compare it to the auto industry. In the auto industry, you have car insurance, you have a car warranty. Both are completely separate things, but both are very, very important. What cyber insurance does is it's protection if you have an incident in your cyber landscape or if your data is stolen. Where a cyber warranty comes into play is we're kind of like a check engine light in a car. So we're helping you proactively if there's anything that will prevent a warranty or, in essence, an insurance claim from being paid out. So, for example, in order to qualify for most warranties as well as most insurance, you need to have things like MFA, EDR running. However, with insurance, all you have to do is do a checkbox. Yes, 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 yes. And we've discussed this earlier, and that's one of the reasons why so many claims are getting denied, because the insurance brokers go back and say, hey, you had MFA turned on, when in reality, it's not. So the way that Cork operates, in addition to giving a financial warranty, is that we're also giving a monitoring platform. So this basically ensures that, yes, this user does have MFA turned on, this user does have EDR installed. And as a result of this, I no longer need to send out a questionnaire. I don't have to ask them if MFA is turned on or EDR is running, because we're tying into the APIs of the managed service provider's cybersecurity tech stack that they're selling their client. So I'm seeing SentinelOne checking in for EDR. I'm seeing Duo MFA turned on. I'm seeing all these things. So it's no longer sending out a questionnaire asking them to fill it out as the honor system. I'm seeing it in person before I could even sell them the warranty. Zach, you had a question?
Yay. Yes, I do. And Matt, I'll go quick.
No, go.
How do you handle the people? So I see you identifying the tech, and I see you identifying even the process. Or is the checking happening? There's a process for checks, a process for this thing being managed. How are you managing or factoring in? And you may not be, and maybe I'm approaching this question wrong. And if I am, I'm not trying to put you on the spot. But how are you dealing with the people element? Because this is unique.
Yeah, so I'll pass it over to Carlson, because I know that we cover things like wire transfer fraud and phishing attack payments, which are not covered by insurance. So Carlson, how are we able to do that?
Well, so this is the interesting thing we have done, right? So I think we talk about people. I'll call this two people element, right? There's a people who's operating, right? Meaning the MSP who manage the IT infrastructure and tool set, right? Then there's the people behind the scenes who's supporting all these policy and such, right? I'll start with the people on the MSP side. I think part of our approach of this whole matter is really working with the right MSP that have a security practice, that understand security is important. They're not going to say, hey, client, buy a cyber insurance policy and buy cyber warranty. You don't need any of this stuff. Sorry, guys. That security firewall needs to be in. You got to have a appropriate security hygiene and backup. You also need to do a security awareness training, so your end client won't click on an email from his boss that says, hey, he just send me a gift card. I'm going to go get him a gift card and send it happening. It happens more than less, right? That has to be the minimum requirement, right? The MSP got to be security focused. They got to make sure the end clients are trained. Now, on the other side, it's like, well, how the heck do you back that? But insurance can't back it. Well, that's the beauty of a warranty, right? You go buy car warranty, right? Sometimes they even cover, the car warranty can cover, your windshield getting hit by a rock. Right? Insurance will never cover that. A warranty really fills that gap. To make it even better, the way we've done it is that we actually back every warranty with our own capital. We put our money where our mouth is. Instead of saying, well, we're going to sell this risk off to such and such. No, we're doing it with ourselves. We back it, so we have the ability and the flexibility to say, we will back this. So in case Happened more than once. Every MSP would tell you, yeah, one of my clients just clicked an email from his boss, bought them an iTunes gift card for $300. We're gonna do that. We're gonna support that so that the MSP can become the hero for their clients. This is the thing that causes friction, right? And we always, advise, and I talk to a lot of insurance carrier. You guys got to do that. That's easy money for you, right? That's easy building that trust. But the reality is, insurance is a very different business than warranty. Warranty is warranting the environment, filling that little gap. You can't buy car insurance that cover your windshield crack. You can buy
Can
car
you
warranty.
walk us? Because I'm still like I understand the dash light analogy, and I'm intimately familiar with all these security technologies and how they can be providing insights, and I've actually seen the demo of your platform. But I'm curious if you could walk us through the life cycle of a bad thing happening. So bad thing happens, then what? Do we go? Is the first call to the insurer? Do we call you guys during that phase? Like what? What?
Oh, I just got the
Nick
name.
got a
before.
slide for everything. Perfect.
I got a slide for it all.
He does. So okay, but tell me a story while you're tell me not an example. Tell me like it could be a made up story, but tell it like a story, like from beginning to end here. What happens?
So Nick, you want to tell a story?
Yeah. So it's
Actually,
all about reducing the customer's out-of-pocket expenses, because we've seen that on average, small businesses only have about 5 days worth of operating cash available. So to have them lay out tens of thousands of dollars while they're doing something with insurance, crossing their fingers, hoping that insurance is going to pay them out, when in reality, 30-40% of the times that claim is going to get denied, based on the data we showed you earlier. That's very, very dangerous for a small business environment. So with us, it's all about giving the MSP and their small business customer cash when they need it now. So if it's something small like a phishing attack payment or gift card fraud, where Mary from marketing sends a text of her CEO a $250 Amazon gift card because that's what CEOs want, that's the type of settlement we're able to pay out in a matter of 2 days. That's easy. If it's something
Matt asked
bigger,
me for that the other day. I thought it was weird.
yeah.
So wait. 2 days.
Yep.
So bad thing happens. Mysterious bad thing. We got malware and we lost. I don't know. We lost a bunch of data. Maybe we have cyber insurance. Maybe we don't. And then we remember. Oh yeah, we've got Cork.
And
So
Cork covers data recovery. Cork covers
But-
data
but-
recovery services.
But who does what? The service provider gets on the phone. Someone fills out a form. What happens?
Yeah, Carlson, you want to walk through that process?
Yeah, the form is pretty darn easy. We try not to have people have to fill out any forms, right? They would literally, for MSP, we just go file right next to that client. The moment they file for the issue, it literally I think it's like, I counted, it's like 3 clicks. And that 3 clicks, the moment that we say, yep, this is a valid claim because we can see the data, there was actually an incident that happened, we will release if you look at this, it's called instant fund access, regardless if you're with or without insurance. What that is a virtual credit card that's issued to the end client and or the MSP. So now instead of one of you have to be the bank of however much dollar you need to spend to stood up a virtual environment or start with the remediation or the protection from that standpoint, there's a virtual credit card that you can charge right away. Now, of course,
So
if you charge a nice meal on it, we can deny it, but the goal is for you to have instant fund and dollar to start the protection or start the parallel environment build out to help your client to get back up and running. That is simple as that.
The continuity and recovery things that need to happen, right, are going to cost money. And what you're saying is the client can charge to this virtual account,
Yep.
right? You guys will deal with the validation of those expenses as a secondary activity, but basically they can start running with the recovery pretty quickly.
That's why we call it instant. The moment you file it, we can see it right now. Of course, if you go back, I am finding that Nick went out and bought a couple Kyber crystal. That's probably enough for recovery services. We can probably.
He would only need one, man. You know.
Only one. Okay, sorry, one and his reader. We're in his writer, right? So, but that to us is is part of what we designed to do, so that now you're not sitting there to talk to your client going, hey Nick, can you just give me a bill. We're gonna be billing at 3.5x, 3x, right? Because weekend time. It is about get back up and running quickly and get stop the bleeding before it gets worse.
Yep. So that all makes sense to me. I get it now. I get it now. Which is
Yep.
bad thing happens. Click a button. File for
Yep.
sort of like putting a ticket in, right?
Pretty much.
And the payment trail gets established there. We can start billing against it pretty immediately.
Yep.
Um,
You got it.
and then sort of like the reconciliation happens as a secondary activity, right?
Correct. And
Well,
and
that's really different than insurance, right?
Yeah. We try to make it easy. We try to make it painless, right?
With warranty, it's pay now, ask questions later. With insurance, it's ask questions. Oh no,
Maybe
gotta
pay.
wait. Gotta wait. Okay, maybe we'll pay you.
Yeah.
Well, I love that. I heard you breathing into a statement. So mine's a statement that's quick, and I'll let you go, Matt.
Ooh.
I love that you guys are backing this with your own money because it says you guys believe in the concept. It also whereas I'm not saying that's not necessarily true with insurers, but what I think is really interesting here is you're very thoughtful about what results in preventing attacks.
Yeah.
And that's what you're basing this on. And I think I think Matt agrees with that for the most part. Now, how we've gone about solving it are two different interesting approaches, but controls and actions and proper cybersecurity hygiene is extremely important.
Well, let's be clear. The space we're in is left of boom, right? And yeah, we're going to help you stand up and prepare for right of boom,
Yep.
right?
Good
By
point.
making sure you have an incident response plan and people and all that. But like basically, we're helping you defend yourself with the understanding, even if you're really good at it, you're only going to be able to defend yourself most of the time.
Well,
right?
I'm thinking about it from the perspective of how we both relate to cyber insurance.
Oh,
'cause
yeah,
that's what the
yeah.
conversation is about. Because
Well, I think we're in alignment there. I
no,
think
that's what I'm saying. So
Yeah.
for us, we're
I think you
looking
have
at
a good point, though, right? Think about it. All insurance business, let's say financial protection business in general, right? It's not just cyber, right? They are on the right of the boom, like right of the incident. Bad things happen, they will come in. They help you to recover financially, right? Left of boom is, putting a fire extinguisher, fire alarm in my house, right? It's all the thing to prevent the side of the equation. But if you take a look at both the business model, they're independent. They're not connected in that case, right?
Yeah.
You look at what Cork is, we made it very unique is that if you notice a lot of conversation we're talking about, it's actually the left of boom. We're trying to make sure your current environment, if you're able to prevent it, is a win-win-win for all parties, meaning that it's winning for the end client, win for the MSP, and win for Cork in general, right? So in some way, instead of us trying to make our questionnaire more mystical, whatever it is, or make it a little bit more reason of not to pay, it's about, guys, our effort is investing in engineers, security engineer, right? As I think, I don't know, guess one of our guys who oversee our security, Ryan Weeks, right, knows, he runs Right of Boom. He said, prevention is better than recovery. So we focus all our effort in making sure the preventive aspect is done first. And that's what, the goal is, if you don't get there, we can minimize the payout that ever have to happen. Now, are we ever going to have to make a claim? Absolutely. It's going to happen. You like it or not, right?
Yeah.
But if we put all of our effort to help on the prevention side, that's better than going, hey, call me when something happens, right? It's really, so we're in some way crossing the bridge between our accountabilities on the left of boom in order to ensure where the boom business is, functional. I think that's a really different mindset.
I love it. Carlson, I'm going to use that as your takeaway for today because we're getting up against the time here, and I'm going to take this opportunity.
We got like 3 hours on this.
We can go another time. We'll do this again sometime, man. I'm going to take an opportunity to make a quick point as my takeaway, and instead of a takeaway, it's going to be a point in relation to what you said, and it's the cyber insurers are trying to do their best. To Matt's point, they're doing their best. We're trying to support the cyber insurance. We're trying to support MSPs. You guys are trying to support people being insured, but we're both trying to support elements of that industry. And we talked early on about how it's binary right now, and we both are approaching with solutions that allow for non-binary communication. Our tool allows for that scattering of where you could be in the maturity level of implementation, and being able to give that evidence to an insurer gives you a much more clear bit of evidence around what it is that you're doing and how you've satisfied their expectations, which makes it a whole lot more likely that A, you're going to get the insurance in the first place, and then B, that it's going to be accepted. And then you guys are taking the approach on the other side that's, hey, you should be doing these specific things. And if you do, we got your back, because we know from a risk perspective, it feels pretty good. So I love how we're both supporting the industry in handling the cyber insurance kerfuffle, because it needs to get solved. And that's my takeaway. We got two awesome boys here for a couple more takeaways, and then we'll wrap.
Well, I just want to draw attention to something Carlson said early in the call about when you're evaluating the value of an insurance policy, you really need to look at the space between the deductible and the sublimit. And if you're not paying attention to that, you really you may have no idea what you're buying.
Yep.
All right, Nick.
Yep, I'll just leave it as, with a cyber warranty, it's really a new avenue for MSPs to still offer financial protection to their clients while making money along the way, because this is something they can earn a margin on. Whereas typically with cyber insurance, it's just the sales guy at the insurance broker making all the money. The MSPs are sort of left on the sidelines. So now it's the best of both worlds. We're still giving financial protection to the client to fill in the gaps of cyber insurance while the MSP is making money along the way.
Love it. Love making money along the way. Well, thank you guys so much for joining us, Carlson and Nick. This was awesome. I enjoyed the conversation. Thank you guys for the laughs. Thank you to the audience for joining us and being there. Awesome. We appreciate it. Please make sure to check us out next week. We're going to be having a conversation around aligning MSPs and insurers to communicate, which will be a little bit more in depth around that specific relationship. So that's going to be a lot of fun. We've got our Cyber Success Peer Meetup that happens on Fridays at 11. It's in our partner portal if you're interested in that. And I hope everybody has a great weekend. I hope people enjoy the sun and do something fun. I didn't mean to rhyme there, but it happened. So have a good weekend.
All right.
Oh, I gotta hit a button, guys.
He's into the next work hour, man.